Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to work through Twitter, give you my financial opinions around other people's opinions, and kind of describe what some people's opinions are on the markets and where that opinion is coming from. We've got technical analysis. Technical analysis is basically watching the herd or the human herd interact with each other to create these patterns. And it seems like these patterns are forming, which are bullish or bearish patterns in the markets. And some people use those formations to basically gather information of how humans are lining up a potential move in the future. Others look at fundamentals, they look at inventory levels, they look at areas where you can see deficits in the market, where there's more demand than there is supply. So people do look at that. Some people look at the macro environment and the credit cycles, which is the business cycle. So they look at money coming into the system at a rate faster than what supply can respond to, which would be inflationary. I kind of do all those things. I look at the macro, I look at the credit growth or expansion, I look at the supply demand deficits, and then I also look at technical analysis to see how the humans are interacting with each other and how they're lining something up. And I think that's the only thing you can do to try to get the highest degree of probability of success. And again, it's always about the probability of success. And people say, well, no one tells you the exact probability because you don't know the exact probability. It's just saying, what are the odds that you can do to put in your favor versus doing nothing and being blindsided by whatever. Commodities and a lot of the commodity companies are cyclical in nature. They have their time in the sun and then they're really bad in other market conditions and other cycles. During inflationary cycles is generally when commodities do very well. In disinflationary or low inflation and low interest rate cycles, that's generally when the overall stock markets do very well. The reasoning is inflation is generally when commodities are short and there's credit expansion. It's a combination of those two things. The other side is the low inflation, low interest rate environment is generally when there's a abundance of commodities, and then the companies go up in value because the interest rates go down, your valuations go up, and they're just converting those commodities to usable products. And when there's an abundance of commodities that are cheap, they make more money. So let's dive in here. Let's take a look and see what's going on. Again, if you want to follow me, it's at finding_finance. And if you want to follow me on the website, it's finding-value.com. You can join our community there as a platinum member. And don't forget, 7 a.m. Mountain Standard Time, question and answer session. So we've got Grady here. Grady's got a lot of good technical analysis. Technical analysis on the long term is charting the fundamentals. So when you look at things from a decade plus time frame, you're charting fundamentals of something. We don't know exactly the reasoning why the market may be lining something up, or maybe we do know the reasoning why. But it's charting the fundamentals. On a short term, we're charting the emotions of humans. So what he's got here, he's got silver as a yearly chart. It says using the yearly time frame plus closing prices, we can see that the neckline for the enormous cup and handle for silver comes in very much lower than if we use lower time frames. Here, the big breakout levels is about 31, 32, and not the 38 and 50 we get with lower time frames. So this is the yearly. What he's using is the closing price of these yearly candlesticks. And he's saying once we break above $31-ish, we are broken out of the big long-term cup and handle pattern that we've got. This is going back to 1972. This is the largest cup and handle pattern that I think anyone's ever seen. If we break 31, we can see a big move. And it looks like we've got a cup and handle and a cup and handle, two of them integrated into one chart pattern. When doing technical analysis, what you like to see is you want to see a dream within a dream. What that is you take a long, big picture time frame, you get a really good chart pattern, and then you dive into shorter time frames, and then you get another really good chart pattern. You dive in again, you get another good chart pattern. That's what I consider to be called a dream within a dream, because you got a dream setup within a dream setup. That's the ideal setup that you could potentially have, and the alignment that you're looking for. But silver, it's probably going to be an inflationary period or something to do with money or credit problem in the system. This is where we could see a big move to the upside. It may be something completely out of left field that nobody really knows about. That's also a possibility. We've got Cuppy here, and Cuppy, I like some of his views. He says only two levels matter. Watch $2,000 in gold and watch $100 in TLT. If either of these are given, we effectively have entered an emerging market crisis. My friends overseas know how to play this. Western finance bros are gonna get looted and badly. Whose team do you want to be on? So if you go on here and you go in here, this is kind of cool. He says the last 9 months has sucked for the CRBs, commodity index and stuff like that. We suffered through central banks raising rates and convincing generalists that commodity demand would decline. We suffered through a Chinese lockdown that confirmed the bias of generalists, with the sharp reversals over the past few days. I want to declare the pullback over. It has positively sucked since last summer for those that survived and averaged down. It's about to be another golden era for CRB longs. We're about to have a phase shift, like when a solid turns to a liquid. CRBs, commodities like gold, that have low teen fives about to trade like Bitcoin with 100 IV. I think that's the volatility and how big we could move up. Oil's going to trade like a crap coin. Congrats for surviving this long and even adding at times. This shakeout was surreal, all based on bad data and Chinese lockdowns. Where will future supply come from? No one has expanded investment over the past few years. Demand grows every year. J-Powell wants to destroy demand, but he's failing at it. All he can do is destroy banks that lent to crap coins, VCs, PE, CREs. He's just blowing up his friends. The market is sniffing out that he's going to pause. When that happens, CRBs will scream out of control. The downside move is over. Now we buy time and continue drawing stocks. The slingshot is coming. With the slingshot, J-Powell has a choice: save the currency or save his buddies. He's going to toss the USD into the trash heap as all mismanaged currencies. When this happens this fall, you'll have a cue to rip every hard asset. It's coming. The pain is over. Now it's just a question of how much upside can you stomach. Congrats on surviving. It sucked. Now the fun starts. So he's talking, what he's talking about here is he's talking about when they reverse course and they print money, that money is going to flow into commodities because that's where the shortages are at. And we have not solved any of these problems from an investment side. And I think he's particularly talking about oil and a lot of other commodities that are going to run big deficits. When that money gets printed, it's going to go into commodities, and they're not going to be able to control that. They're basically in a tough situation. And I agree with his opinions around that. Go Cuppy. So Grady says, at some point, we will see hugely increasing capital flows into commodities and hard assets. It will be like a longer afterburner. The combo of persistent big inflation, supply destruction, yield curve control, QE infinity, etc. will blow your socks off if you're not ready. The big asset rotation. So these guys, Cuppy and Grady, I would consider myself in that camp and their viewpoints being the same viewpoints as them. What they think and what I think might be coming, and I don't know what's going to happen in the short term with this banking crisis and the fear in the markets, but on the long term, the deficits are there where any money that comes into the system puts everything into a shortage. That is going to be inflationary. In fact, it could be hyper stagflationary. Because if the supply of oil or the supply of copper or the supply of, you can name any of these commodities, if they're short and they can't keep up, the price of all of those things are going to go higher. And if they're adding money into the system through yield curve control, QE, whatever the heck it is, that money is going to cause a bigger problem with inflation because you're not getting a GDP growth accompanying that money creation because of the supply deficits in the markets. So one could get scared in the short term and sell their assets. And these guys are saying, whoa, 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 calm down. This is over with, guys. We could see a big supply problem come any second here, driving stuff higher. So there's a big difference, or there's a gap that has been created between the technical analysis guys, which do look like we could go down further in the short term, and it very much is a possibility, versus these guys that are looking for the fundamental aspects of it. Now, some of these guys are also technical analysis guys, and they also think it's over and we could go higher. So conflicting opinions on the short term. My opinion is I'm neutral in the very short term because I don't know which way it's going to go, but I'm not selling anything. I'm going to ride through it and position myself for success either way of either outcome, which means you could save cash on the side in case we get a little dip and maintain my positions or something like that. So Grady says, this chart clearly shows how undervalued gold is relative to the U.S. currency supply. So gold has a very long way to go compared to M2, and silver will outperform gold. And silver miners will outperform silver, plus everything else, really. Yeah, it looks at two very similar dashed marked positive divergences and what happened after the first one back in 2005. Coming on up. Here is a double bottom. We've got the lead-in pattern, one bottom, the second bottom's forming, and we're probably going to go higher on a long-term time frame. What this is telling us is that the market conditions that are coming are going to favor gold, and those market conditions will reprice gold because money's going to run at it. That's what this chart means, and that's what is going to happen. So it's the market conditions and the way that humans interact with each other is telling us that we are coming into some condition where money's going to rotate out of bonds and stocks and into gold and other commodity assets. And that's the environment that is coming. We've got North's chart says, repeat after me, we are entering a new paradigm. So he's also thinking that we're entering a new paradigm. This is the US 10-year yield versus the M2 money supply. And you can see that the money supply, or 10-year yield, is outpacing the money supply. And that we are in and on top of a long-term trend line and the cloud. The cloud is, once you get above that, we can really start to move to the upside. So it says consolidating above the Ichimoku cloud after breakout. This is very bullish. And what he means is it's bullish for yields to go higher. There are some projections out there that yields are going to really take off. What that means is that you could have a currency crisis. A currency crisis could be the reason that we are lining up gold and silver the way we are, and why commodities could really take off because the currency is going to eat it. Lots of inflation. Already talked about that one. Now here's gold. It says we know by Friday. We look at the gold chart here. This is gold versus the US dollar. We have a massive pattern here, which is a continuation pattern for a flag. It's a big flag and it's a continuation. This guy here is basically, you can add it on top of that. We have a breakout and a back test that is getting performed right now, which means gold could really start to move to the upside. And the market conditions also align with that potential move. So good work here. And that's what we've got for today, guys. I think I've already talked about that. So that's what I've had for today. And hopefully you guys are holding in there. Commodities are the spot to be. Same with precious metals. I know there's a lot of people who think they can time the short term. Good luck to them. I'm in it for the long term, and yeah, I'm building cash, and maybe we get a short term little downdraft in the short term. It is possible, and I'll have some cash ready to accumulate when that happens, or if that happens. But that's what we've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. And we'll catch you later. This is Finding Value.